they force everyone to make irrational decisions, take on debt they shouldn't take on, buy companies they shouldn't buy, issue dividends they shouldn't issue, and buy back shares they shouldn't buy back. And the significance of Bitcoin is in two ways. First of all, CFOs and CEOs starting in 2024 will now have the option to buy Bitcoin instead of buying treasury bonds. So now you can buy a commodity that's liquid and fungible on your balance sheet. And that commodity is a scarcity. And because it's a scarcity, that means you can expect it to accrete in value more than 7%, probably 14% a year over the long term, even after.
Bitcoin price noted a solid rise over the past day on the back of two crucial factors, which pushed the cryptocurrency to trade beyond $35,000. The last time Bitcoin was at this price was back in May 2022, which makes this not only the highest price in 2023, but also in the last 18 months. One of the biggest driving factors was the Federal Open Market Committee, FOMC, meeting. In the meeting, as well as the speech from Chair Jerome Powell, it was announced that the Fed will be keeping the interest rates steady at the range of 5.25% to 5.5%. Increasing interest rates create an atmosphere of caution among investors, pulling them away from risky assets such as cryptocurrencies. However, a decrease or keeping them steady acts as a catalyst for a bullish momentum in the crypto market. Secondly, Michael Saylor's MicroStrategy announced that it acquired an additional 155 Bitcoin worth $5.3 million. As a result, the total holdings of the company now stand at 158,400 Bitcoin, which at market rate is worth around $5.54 billion. Why is MicroStrategy still acquiring Bitcoin? Is there a secret to it? Or just the massive love Michael Saylor has for Bitcoin? We steady going to find out in the video. Don't go anywhere. Just hit the like button, subscribe, and enjoy the video.
Bitcoin is now emerging as something superior to that. Bitcoin allows you to take on a strategy of acquiring scarce, desirable property, but now you can acquire it in units of $20 at a time or $200 at a time. And so it's an egalitarian strategy for wealth creation or wealth preservation. The big catalyst here, I mean, the first one was, Satoshi's creation of Bitcoin, right? Put a big star on the map nearly 15 years ago. The second big milestone was the end of the block size wars, when Bitcoin was established, as this censorship-resistant network that's resistant to the meddling of corporate interests and others. And we sorted out what's the dominant chain, and a lot of theory and a lot of values got cemented in the block size wars. I think the third milestone is the entrance of is actually COVID and the entrance of corporations, right? COVID catalyzed corporations to look at Bitcoin. So without COVID, MicroStrategy doesn't do Bitcoin. And without MicroStrategy doing Bitcoin, probably the next set of companies don't do it. You don't get 24 Bitcoin holders, and then you don't get the accountants interested, and then you don't get fair value accounting, and then you don't get the clamor for the ETFs and the spot ETFs. So that was the next milestone. Then after that, the spot ETF will be the next really big milestone, because it'll be a high bandwidth institutional on-ramp for tens of billions or hundreds of billions of dollars of capital. And so that's really key. So, and then after that, the embrace of the traditional banking networks, right? The Deutsche Banks, the Santanders, other banks starting to custody Bitcoin and provide banking services. So all of those things coming together, they actually deliver digital scarcity as a fungible liquid asset to all classes of investors. Now, if we consider them, the retail investors will benefit. They've been engaged, but there'll be an order of magnitude increase in retail participation with spot ETFs because just about every working person has a 401k that's wired through conventional Wall Street money managers. And so you'll start to see the flow of those kind of funds enabled by the Fidelities and the BlackRocks of the world. And that will increase retail participation by an order of magnitude. I think institutional participation will also increase by orders of magnitude because the spot ETF. They really can't engage in the current structure because all the institutional money managers have accounting systems, compliance systems, control systems, risk management systems that are all trading systems and collateral systems that have all been built over 30 years. And in that system, they can punch a button and buy $1 million of Apple stock or $1 million of a gold ETF or $1 million worth of the S&P index or $1 million of bonds. And they can just do it instantly and everything is accounted for. And if they make money, they get compensated. And if they lose money, right, they get criticized. And at the end of the year, their taxes get paid that way. And if they want to buy $100 million, their bank, like JP Morgan, fronts them the money, and so that entire system, which is a combination of technical functionality and accounting functionality and risk management functionality and financing functionality, all of that gets activated by the ETFs.
Bitcoin's rally is bound to have a likely bullish impact on other crypto assets as well, and this is also the case at the moment. Apart from Bitcoin and Ether, the total market cap of other altcoins is preparing to breach through an 18-month-long downtrend that has resulted in a declining market capitalization since May 2022. In the past 24 hours, many altcoins have noted a rise, but the two altcoins that stand out are Solana and Shiba Inu. Both the tokens are on the verge of a breakout and could rally ahead if the downtrend line is tested as throwback support. However, such breakouts have been noted to fail in the past, which calls for investors to be diligent before jumping in to make profits.
That Bitcoin will creep into sovereign balance sheets, both sovereign wealth funds as well as sovereign nations. It'll start with the smaller ones that are more innovative as a small percentage. And now over time it will grow. It's not going to replace the currency that's used as currency or the sovereign debt used as the lowest risk asset. It's going to replace real estate and equity and property and all the other things that people buy. It's like, if you're the sovereign wealth fund of Norway and you're comfortable holding $100 billion of S&P equities, you could allocate half of that to Bitcoin instead. And you might very well convince yourself that that's diversification and that's less risky. So Bitcoin does serve this new emerging role, right, which is as a diversifier. And I think that at this point it's probably worthwhile for us to come back to how does Bitcoin compare to sovereign debt as an investment asset. And if we think about that, sovereign debt is low risk money. It's a monetary investment. I've got $100 million in cash flow and I have to hold it somehow. So I've decided I'll invest 90 million of it in treasury bills with a duration from 3 months to 12 months. Low duration risk, low credit risk. I'm getting some yield. I'm holding it as a currency substitute of sort. What's the negative, the positive, and how do I compare it to Bitcoin? Well, Bitcoin is a non-sovereign store of value bearer asset that does not generate yield. Treasuries are a sovereign asset, sort of a bearer asset for most people think of it that way, although it's not quite. But it has counterparty risk in a couple of ways. It has counterparty risk over the long term because there's inflation of the unit. It's currency derivative. It doesn't have counterparty risk if it's the reserve currency of the world, but every other piece of sovereign debt has counterparty risk because Argentine debt instruments get defaulted on. Nigeria might default on their debt. So most nations other than the United States could default on their debt, and they could do a soft default, or they always have this option of a subtle default, which is, I'm just going to print twice as much of this stuff and I'll pay you off in the currency unit, but I'll devalue the currency unit. So I'll devalue my currency to pay you off. And maybe I'll devalue you in the near term, or maybe I'll devalue you, like if I basically issue a bunch of 10-year bonds in the euro, and in 10 years I told you that there's going to be 10 times as many euros in circulation. Well, then you don't want to be holding the 30-year euro bonds. You might not be devalued in the next 12 months, but you're getting devalued in 10 to 20 years. And so the 30-year euro bonds are going to mature worthless, right? So sovereign debt has a lot of that kind of duration counterparty risk, and with every country, every kind of sovereign debt has duration counterparty risk because they can change their monetary policy. And then all of the weaker countries, the second, third tier countries, have credit risk as counterparty risk. Even if you have no duration, if you have 90-day sovereign debt from the United States, you still have sanction counterparty risk. If you're on the wrong side of the nation in a war, then you're going to find yourself sanctioned, and those instruments are going to be canceled. So they are securities. They're securities issued by a government, right? A nation state. And they're senior to, of course, a whole class of other credit securities, like the municipal bonds that are issued by cities like New York, or states, or of course, corporate bonds and other kinds of bonds.
The chairman of the U.S. Securities and Exchange Commission, SEC, Gary Gensler, has wished Bitcoin's white paper a happy anniversary. In a post on social media platform X on Tuesday, the regulator wrote, "Happy 15th anniversary to Satoshi's famous white paper that started crypto." He also attempted to make a humorous remark regarding Bitcoin creator Satoshi Nakamoto's Halloween costume, asking whether we would be able to tell if Satoshi dressed up as himself for Halloween. Gensler ended his post with a trick-or-treating message for crypto firms. Any crypto companies that are tricking investors should start treating them to compliance with the securities laws, he warned. Gensler's message garnered numerous comments on social media, with many focusing on when he plans to approve a spot Bitcoin exchange-traded fund ETF. To date, the securities watchdog has not approved a spot Bitcoin ETF, despite approving several ETFs based on Bitcoin futures contracts. Gensler has repeatedly said that he views all crypto tokens as securities, except for Bitcoin. The SEC chairman said this week that the regulator is considering 8 to 10 spot Bitcoin ETF applications. Based on public records, 12 spot Bitcoin ETF applications have been filed with the SEC, including Grayscale Investments' application to convert its Bitcoin Trust, GBTC, into a spot Bitcoin ETF. Other applicants include Cathie Wood's ARK Investment Management, BlackRock, Bitwise, WisdomTree, Fidelity, VanEck, and Invesco. 8 applications have the latest possible review dates in the first quarter of next year, and 3 have the latest review dates in the second quarter. Some analysts, including those at JP Morgan, are expecting the SEC to approve multiple spot Bitcoin ETFs at once. Recently, the price of Bitcoin surged on speculation that BlackRock, the world's largest asset manager, is close to launching its spot Bitcoin ETF. Bernstein Research said last week that a spot Bitcoin ETF looks like a done deal in January. Do you think we should call the shot for a bull run now? Or is it too early to decide? Let us know your thoughts in the comment section below. Don't forget to hit that like button, subscribe, and turn on your notifications. Thanks for watching.